I was wondering if we could start with that. What do you think is happening in the treasury market? Anything out of the ordinary?
Good morning, David. Thank you for having me. I think what we're seeing is basically the market giving the U.S. economy a pass. The data has been very, very strong. I think the underlying positioning in treasuries has been short, and yet we have made the assumption that we're getting very strong base effects coming through. So we've had a retracement of the 10-year yields back below the 1.6 level. I think from the perspective that will be a little bit of a holding pattern here. We've gone through and we'll have some more auctions coming through, and I think we'll see the return of foreign investors coming in because U.S. Treasury yields now, even on an FX hedge basis, are becoming attractive once more. So we're getting demand coming back into the market from the international players. So I think we're in a holding pattern for here. But ultimately, by the end of the year, we still think U.S. 10-year yields go to about 2.15%, largely because we'll see this persistent and very strong U.S. economic performance shine through.
Okay, so Claudio, what is the read-through of that forecast to this part of the world then?
Well, we're still kind of constructive on China. So our year-end forecast on dollar China is 6.3. That compares to the Bloomberg consensus, median consensus of around 6.4. We still feel, as we'll see in the data today, that China's export-led growth is still very strong and robust. We need to see more on what happens to the domestic side. But ultimately, when you look even on a trade-weighted performance year to date, there are only two currencies that beat the dollar in trade-weighted performance terms. That's the South African rand and the Chinese renminbi. Now, China and South Africa have very little in common, but what has happened is obviously been the performance of the current account and the export side, and more so the commodity side for South Africa. But you are still seeing that resilience there. That said, we still think there are simmering risks in the background. So we are long volatility in the renminbi through an option structure because we think things such as geopolitical tensions, default risks, and so forth do represent a risk to our constructive view. So we do like to be a little bit hedged with some long volatility options.
Claudio, you mentioned exports. I'm wondering, does that also relate to your other call? You like the won over the dollar. Talk to us about the thinking behind that.
Well, in terms of Korean won, we're actually thinking on the short side of Korean won. And when you look at the Korean won, its weakness has really been conspicuous this year. And that's largely been a function of Korea recycling its current account savings through allowing or pushing more domestic overseas investments, particularly from the National Pension Services Fund. So we actually like being underweight or short Korean won relative to the renminbi. So we do think there's some divergence. So there's some interesting idiosyncratic stories happening in Asia.
Claudio, as we make our way the rest of the year, is there any other central bank that you think might surprise us?
Well, I think, around the region, there's some interesting stories going on. The Philippines, we're still short the peso. We still see inflation risk in the background there. So that's one where we have to be focused on. Clearly, if the COVID situation deteriorates, there is also a risk potentially that they'll have to step in again in terms of the Philippine Central Bank providing support to the government financing if they need to step in. On the other side, we are constructive still on India. We think that the sell-off that we had in India currency and the Indian rupee is an opportunity still to be long. A critical thing is that we sustain below the 75 level, but we could make it back to the 73, 72 levels. Clearly, the carry is the attractive feature of the Indian rupee. In addition to that, it's also a function of the fact that the balance of payments position in India is still relatively constructive. And the Reserve Bank of India wouldn't want to have sustained weakness of the Indian rupee at this stage of the cycle, given that it's still grappling with a little bit of the inflation situation, and it's just launching a new variant of its monetary policy in terms of being more committed on a forward basis to quantitative easing.